Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we would be discussing about what to expect in Nifty, Bank Nifty from here on, along with the key levels for both the indices post the weakness in the indices in the last few sessions. We'll also be discussing on key sectors and stocks that we should be focusing on for the day and the next few trading sessions. Yesterday we saw Nifty opening gap down around 19,530 levels. However, from the lower levels, indices bounced to 19,680 towards the previous day's close, but it could not sustain at the higher levels. And finally, the index witnessed a minor cut of 0.2% going into the close. Bank Nifty 2 opened with a gap down closer to its all important support level of 43,650, but couldn't breach that and witnessed a recovery towards 44,050 on the upside. But it too witnessed a sell off in the second half of the session and closed around levels of 43,750, down 0.3% for the day. US Treasury yields have inched closer to 4.93, and just to refresh our memories, this level was last seen in 2007. Hence, this will be an important factor to watch out apart from Brent crude oil prices, which are sustaining above $91 a barrel, and dollar index also sustaining above 106.3 levels. Coming to index levels, post the fall yesterday, index for the day could witness resistance closer towards its 20 EMA, that is around 19,710, 19,735 levels. Until these levels are not crossed, Nifty could retest the support zone of 19,450, 19,555. So 19,540, 19,555 would be the support in intraday trade. Only a crossover above 19,735, index could witness a short covering move towards 19,800, 19,820 on the upside. Once again, from a slightly medium term perspective, we would reiterate that 19,830, 19,850 zone is an extremely important resistance zone, and only if this zone is crossed, a bigger move towards 20,000, 20,100 can be expected. Looking at the OI data for the monthly series, significant put OI built up has been seen at 19,600, 19,500 strike, while on the call front 19,700, 19,800 continues to witness open interest built up. Overall range for the next few trading sessions could be 19,470 on the downside and 19,850 on the upside. Coming to Bank Nifty, yesterday post negative opening, the index witnessed a recovery towards 44,050. However, that got sold off and selling pressure was witnessed in the last hour of trade. This indicates that the index is firmly in the grip of bears, and going forward 43,600, 43,560 is a crucial support as Bank Nifty has rebounded from this zone several times in the last few months. Any move below the level of 43,600 could lead to further selling pressure up to the levels of 43,300, 43,200 levels, closer towards its 200 DMA. Resistance now would be shifted around 43,980, 44,100. Only if these levels are crossed, we could expect a surge towards 44,350, 44,400 on the upside. Like 19,850 is a major level for Nifty, 44,400 is a major level that needs to be crossed for Bank Nifty. An appropriate approach in the current market scenario would, which are surrounded by too many data points, that too globally, which are beyond anyone's control, would be to mark important resistance levels on the charts, and only if these levels are crossed should we aggressively go long in stock specific opportunities. Also, stocks that we choose, we need to ensure that they are outperforming their sectorial indices as well as Nifty, Bank Nifty at the current juncture. We cannot be doing any random bottom fishing in stocks which are showing any signs of reversal, because it's important to identify them and see whether they are outperforming and have strong internal strength within the charts. Also, one needs to control leverage as well as remain hedged wherever possible. Let's now see which stocks and sectors that are looking positive. Yesterday from lower levels, mid cap IT stocks witnessed a good bounce, bounce back on the back of good results from mid cap IT names, and lack of momentum among the large IT caps were clearly visible. Auto, media, reality stocks have seen a very good traction in the past few days, and stocks from these sectors are looking strong on short to medium term charts. Auto, media, reality stocks have seen a very good traction in the past few days, and stocks from these sectors are looking strong on the charts. Regular listeners of our podcast would surely appreciate that leading auto stocks that we have highlighted multiple times in the recent edition of the podcast have demonstrated stellar performances lately. A positive chart setup was visible in Nestle, Ultra, Chemco, Bajaj Auto, Tata Motors, Hero MotoCorp, Cipla, Kolpal among the large caps, while L&T Finance, Aditya Birla Capital, LTI Mindtree amongst the mid caps have witnessed fresh long positions as per derivative data. If we observe the FI data, FIs have sold over 1200 crores in the cash segment, while DIs supported the market by purchasing over 700 crores in the cash segment. FI's long short ratio for index futures is still closer to 29% as they added 2900 shorts in index future positions. In stock futures side, FIs have bought a small quantity of 2440 contracts, while on options front, FIs have squared off 27,000 contracts of their existing long call positions and bought 26,300 contracts of put options. Looking at overall data, it is weaker in nature and hinting that traders need to be cautious with over leveraged long positions. Just to summarize, key support level for Nifty being 19,500, 19,535 and resistance at 19,730, 19,745. While for Bank Nifty, key support would be 43,600, 43,560 levels, and resistance on the upside would be around 43,960, 44,000 levels. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Do tune in tomorrow for more market updates. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.